Hello, everybody. Thanks for tuning in again. It's Josh Brenner. This is what's happening in the real estate market. Today, we're going to answer the forbearance question. I have a lot of people asking me what's going on in the market. We start talking about it. A lot of people have fears that there's going to be a market crash. They have fears of unemployment. People see prices rising, inventory is low. They can't kind of figure out what's going on. So I have a bunch of stats and graphs that I'm going to share with you today. I'm going to try to run through them as quickly as possible, but they're very interesting and they show you the reality of what's going on with our economy and specifically in real estate as well. So let me share my screen and let's dive right in to, all right, here we go. So first slide. This is from NAR research. This is the National Association of Realtors. They say as more Americans get back to work, we are starting to see both buyers and sellers returning to the market, creating the beginnings of what we believe is a V-shaped recovery in the housing sector. Okay, that's specifically talking about a V-shaped recovery in real estate, specifically residential. Okay, so next slide. The first stage of the recovery looks V-shaped. After bottoming out in April, economic activity has continued to rise into early June, according to a range of private data. An L-shaped recovery in which activity stays depressed now looks remote. And while the overall recovery may not end up a V, it may also be less feeble than many had feared. That was from Greg Ip at the Wall Street Journal as recent as June 15th, 2020. That's pretty good news, okay? It might not be an overall, talking about the overall economy, we might not have a V-shaped recovery. Okay, in real estate, they're expecting a V-shaped recovery. It's already happening. If you're looking around, there's multiple offers happening all over the place. Homes are selling above asking. But for the whole country's overall economic outlook, they're thinking more like a U-shaped recovery, okay? Let's see the next slide. This is home, showings in North America. Okay, how many showings were happening? So weekly showings normalized to the first calendar week of January, 7-day moving average. All right, so in January, first we start out with 0 because that's the beginning of the year. Here it comes up. Then COVID hit, showings went down. All right, now we're like in mid-COVID, right in April, right at the height of it. All of a sudden, people start realizing how important home ownership is again. And now look, it's spiking, 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 okay? And that's consistent with all the activity we've been talking about in real estate. All right, let's talk about unemployment a little bit. This is the chief economist at Moody's Analytics, Mark Zandi. The confluence of high unemployment and the end of the forbearance measures means that we'll get more defaults and ultimately more foreclosures, more foreclosure sales, and that'll put some weakness into the housing market. Okay, well, there's always some foreclosures. So let's see this graph that we have that shows of all the active forbearances, which are past due on their mortgage payment, 77% have at least 20% equity in their home. Okay, 77% of people that own a home have at least 20% equity in their home. If you have at least 20% equity in your home, are you going to just walk away and let your home go into foreclosure? In Southern California, average home price in Westlake Village is $2.5 million. In Thousand Oaks, it's a little over $1 million. In Calabasas, it's over $2 million. Do you think people are going to walk away from 20% equity? And if it's my house and all of a sudden my business stops and I've got no way to pay my mortgage and no savings, but I know that I've got at least 20% equity, guess what? My house is going up for sale and I'm taking my 20% equity with me and then I'll go rent for a little while. Okay, look at this. 59% of people are greater than 30% equity. 59% of people are greater than 30% equity. 18%, 20 to 30% equity, okay? So the chances of there being a huge foreclosure market doesn't look likely. The high level of equity provides options for homeowners, policymakers, mortgage investors, and servicers in helping to avoid downstream foreclosure activity and default related losses. That's from Black Knight. Okay, exactly what I was just saying. All right, now let's talk about inventory. Available listings have been decreasing since September of 2019. All right, this orange line is 2020, green line 2019, blue line 2018. Now these are our national numbers. This is from realtor.com. Okay. Right now we have about 2 weeks worth of inventory, which means every time a house comes on the market, it sells. Homes are actually selling a little bit faster than they're coming on the market. So that's why you have a downward slope right here in the decrease of available listings. The year-over-year change in listings, okay, we have new listings that are down here, negative 25%, and total listings that keep falling down into June, which again, it's a strong seller's market, okay? Buyers have huge demand because interest rates are so low. Can you believe that there are lenders right now that will give you a 30-year fixed loan at 2.875%, 30 years fixed, 2.875. Buyers understand now they can afford a lot more home. The severity of inventory tightness should remain a relative benefit to home prices, but is also a risk factor to the degree of rebound in unit sales going forward. Zelman Associates. Okay, well, duh. Yeah, if there's low inventory, then sales are going to be a little slow. Okay, that's pretty obvious. All right. Inventory as a percent of households is half of the long run average, an all-time low. Long-term average, 2.4%. 1.2% is what we're currently at, an all-time low. On average, there were about 3 offers on a home that closed in May, up from just about 2 in April 2020, and in May 2019, 2.3 offers. This is from National Association of Realtors. Okay, on average, the average home is getting 3 offers. Okay, this is not a normal market in terms of we have huge inventory and you know you can have a lot to choose from. When a nice home comes on the market, if you've got a nice home and you price it strategically, you're going to end up with a bidding war. Okay. All right. Now a little bit more on unemployment. Unemployment rates much higher in the younger population. All right. Look over here, specifically 16 to 24 years old. Okay. They make up more than half of the unemployment. Well, this section is not buying very many homes. I think it's less than 3% of all homes that are sold to anybody under 24 years old. Okay. So what does this mean? The unemployment isn't really affecting the real estate market all that much. Okay. Percentage of income needed for a mortgage payment decreasing dramatically as mortgage rates fall. Well, yeah, look at this. As the interest rate comes down, you don't need to make as much money to afford a house because your payment's cheaper. It's an amazing time to be a buyer and a seller right now. Home appreciation adjustments. Pre-COVID, we were adjusting at 4.7%. We're still gaining at 3%. And this is the forecast, okay? And that was Ivy Zelman, and this is a Reuters survey. Home prices projected to continue to appreciate. Okay, Home Price Expectation Survey, Mortgage Bankers Association, Zelman and Associates, Fannie Mae, National Association of Realtors, and Freddie Mac. Okay, with the exception of Home Price Expectation Survey, all of them specifically look at Fannie Mae, National Association of Realtors, and Freddie Mac all expect, and Mortgage Bankers Association, don't forget them, appreciation this year upwards of 4%. And next year, 3 to 4%. Okay, so homes are still going up in value. Nearly 30% of respondents living in a high-density urban area say that the pandemic is prompting them to want to move by the end of the year. This is more than double the rate of those living in rural parts of the country where residents are much more likely to stay put rather than to relocate. Realtor Magazine. Okay, what has COVID done? You know, it spreads very rapidly. So people that are living in very dense markets feel like we need to get to the suburbs and we need to get there now. Okay, they want their elbow room, they want a piece of land, they want a single family home, they want a backyard. All right, they're sick of living in their condo or their apartment. All right, that's what's happening. Buyers are showing a greater desire for non-urban properties. All right, rural 16%, suburban 13%, urban 7%. This migration to the suburbs is not a new trend, but it has become more pronounced. After several months of shelter-in-place orders, the desire to have more space and the potential for more people to work remotely are likely two of the factors contributing to the popularity of the burbs. Javier Vivas from Realtor.com, Director of Economic Research. Okay, there's going to be a mass exodus from the cities out to the suburbs. Since the pandemic altered what buyers value in their homes, builders are predicting how future homes will change as a result and what people will want most moving forward. As people spend more time at home during the pandemic, buyers are realizing which features of their home are working and not working. Home builders predict open concept floor plans will be a thing of the past as people now value more walls, doors, and overall privacy. New construction, which offers the chance to personalize home features, saw its listing page views grow by 73% over last May. That's because there's such a low inventory, people are looking towards new construction. Okay, this part right here. This section right here, the open concept floor plans, well, now that everybody's had to work from home for 3 months, they think, gosh, I need some privacy. I need a home office. I need a home gym. Okay, they need rooms. So that's why they're predicting that. 87% of home sellers are concerned their home won't sell because of the pandemic and resulting economic recession. 51% said that they are seriously worried. 36% said that they are somewhat concerned. Qualtrics survey of home sellers. Well, if you can remember back a few slides when we talked about how many offers on average a home is getting. Okay, the average home is getting 3 offers right now in 2020. And we're in COVID. So sellers just have to be educated as to what's going on in the market. So if you're watching my video and you're thinking about selling, or you know somebody that's thinking about selling, but they're afraid, you know, get them in contact with me. I'm happy to meet. We can talk about a seller strategy meeting and just give them the facts and the statistics about what's going on in real estate. Buyers are motivated. Interest rates are so low. They're at all-time lows, high 2s, low 3s, 30-year fixed. You can come in with less than 20% down. There's really no reason, if you've been thinking about it, not to contact me, or if you have a friend that's a realtor, or you know somebody you already have a trusted relationship with, contact us and sit down and talk with us. There might be a way to get you into the right home. If you're thinking about moving up, now's the time. The money's cheap. Okay, if you're thinking about downsizing, prices are high. I mean, it just makes all the sense in the world. Anyway, I really appreciate you guys for tuning in. This should give you a lot more understanding about what's happening in the real estate market and the economy right now in relation to forbearance. If you have any further questions about this, please reach out to me. I'm happy to sit down and talk. You know, I still have my offer going till the end of July. If you're selling, I am going to pay for your home inspection up front. I'm going to credit you $500 towards any repairs at the close of escrow. And thirdly, I'm going to credit you $1,000 towards your closing costs at the close of escrow. Okay, just for being loyal clients with me and friends. Buyers, I am also giving you a $500 credit towards any repairs in your home inspection, and I am also crediting you $1,000 towards the close of your escrow. So anyway, guys, I hope you had a good day. I hope you enjoyed the video. Let's talk soon. Oh, wait, let me stop sharing my screen. And please feel free to reach out to me. And Have a great weekend, guys. Take care. Bye-bye.